Hi everyone, a very good afternoon to all of you. Thank you for joining us today at our lunchtime seminar, or rather webinar. And today we have our special speaker from iFAST Global Markets, Larel Wong, who is our iFAST Senior Investment Advisor over here. Today she'll be sharing about the widely discussed changes made to integrated shield plans, the riders as well as MediShield Life. So we also will focus on and elaborate on the various newly implemented changes and how they can impact your claims when you're hospitalized and the tips that we can take in order to have good portion of our bills covered by these plans. So furthermore, we will be also sharing the reasons why enhanced coverage on top of basic coverage of MediShield Life would be necessary. So without further ado, let us welcome Larel.
Thank you so much, Sarah. Hello everyone, good afternoon. Thanks for spending your lunchtime with me. So while you eat, you can listen to me. My name is Larel Wong, Senior Investment Advisor with iFAST Global Markets. So while investing for clients, right, part of what I do is to look out for risk that will drain my clients' finances and finding solutions that cover that risk. So today I'll discuss more about hospitalization coverage changes from both the government as well as the private insurer level, so that you can understand how it will impact your finances. Okay, before I begin, right, I just wanted to check with you. How many of you have heard or have experiences of how patients are not being able to claim from the hospitalization policy? Okay, you can raise your hand silently, but I will also share actually at the end of the presentation towards what to look out for to actually avoid root shocks of not being able to claim. So let me begin by sharing insights of the MediShield Life. So next. So MediShield Life was introduced in 2015. So before 2015, right, if you don't have an integrated shield plan, you would most likely have your MediSave money only to rely on. So that's my next point. So which is, remember that many years ago, not everyone is covered by shield plans. So next. So most likely, right, it is inadequate. So that's the reason why government introduced MediShield Life scheme in 2015. And in that plan itself, right, I will shed more light on what did the government foresee, what we may still be oblivious to understand the changes, as well as to see what are the trends happening. So let's go to the next slide. So for the MediShield Life, there are claims limits. So what I'm trying to share with you here is that claims limits increase for MediShield Life. However, if you see what I highlighted in red, the most complex surgical table is a limit of $2,600. So the question to ask is it enough? So let's go to the next slide for other details. So there is also a very inclusive plan. It's more like our social benefit. So it will meant to cover most of Singapore's population. So people with even a very serious pre-existing cases of illnesses, serious meaning like if you have cancer, kidney failure, stroke, heart diseases, it will actually include these people as well with a nominal additional premium. So the next point is it will include people most of its in its coverage. So next, in the aging population wise, as we know, right, Singapore is inside aging population. We are all aging. So as we age older and older, so the question will be, right, is understandably so that the claims experience will also increase. So in my next slide, it will show that while the premiums increase, subsidy also increase to help everyone affected being able to afford the premiums for MediShield Life. So my next slide will also show that the other changes that is involved is that for the private hospital, proration factor is decreased from 35% to 25% for your claims. So for private hospital, so what is proration factor? So it means that this factor will be will be applied to your bill before the claims limits of previously that table that I've shown you will apply towards MediShield Life to compute for your final claims bill. Okay, let's go to the next slide. So many people may think, so MediShield Life, if let's say I wanted more coverage, so what can I do? So there is this thing called the integrated plan. So for the convenience, I will refer to it as IP. Integrated plan is meant to, because MediShield Life is actually meant to cover B2 wards and C wards in public hospitals. So hence to help cover additional costs, so we can always we can buy this IP plan with our MediSave, and you can also choose cash riders on top of it, so that you can have more comprehensive cover. And it's actually not a duplicate, it's actually an add-on. All right, so meaning which you can actually have more coverage if you choose to have better options, or not say better options, but more options in let's say private hospital, etc. Okay, let's go to the next slide. Okay, so many people will question, oh, why do I have to have IP? So IP will actually cover all your bills. If you notice just now in the very first slide that I shared, right, there are claims limits for MediShield Life. But with IP, right, there is this thing called as charge. That means whatever you are charged, then this is whatever that they will cover. Okay, of course there are conditions, for example, like what is your co-payment, what is your deductibles, etc., which I'll go into details later. So second thing is that when let's say if you are unwell, you will have a choice. You will have a choice, not only B2 or C or public hospitals. You can even go to any doctor of your choice. So we know that also public hospitals, right, the queue is a little bit longer, and the diagnostic tests, investigation tests, even looking at seeing the doctor for a second time for the after the test, all this takes waiting time. So which is the reason why, as long as you have more choice, I mean, if you have an IP program, more likely you have more choices. I'll give example of what happened to one of my clients. So what happens is that during COVID, we know that it's a very sensitive period last year. So but because while she's exercising, she's quite young, she's exercising, she felt pain in her abdomen area. So she went to see a doctor. Doctor actually gave her some medicine, a GP. She went to see a GP first. So the doctor gave her some medicine thinking that it might be a urinary tract infection, and then sent her home. 2 weeks later, my client still felt unwell and went back to the same doctor. That's where the doctor decides to refer her to the polyclinic. So after the polyclinic, because during the GP visit, the GP, she was discussing with the GP, and the GP is saying that most likely she will need to go to a gynae. She knows that gynae is quite expensive, so she decided to go for the polyclinic route and be referred to a gynae in a public hospital instead. So with all this, she 2 weeks later she went for a GP checkup, right? So 1 week later she went for a polyclinic appointment. And after the appointment, she was given a referral letter for SGH gynae 1 week later. So all these things takes about 4 weeks. That means 1 month in total. After the first sit down with the gynae, after listening to her symptoms, was thinking, this shouldn't be a gynae issue. I don't know why you're referred here. So that was the first comment. Thereafter, client of course went through all the investigation, and when the GP sat down, when the gynae sat down with her again, the gynae announced that she has 17 cm cysts in one of her ovaries. So the next thing the gynae said was, okay, we'll do a surgery to remove the cyst because the cyst is really too big. And 17 usually for a cyst, right, usually is about 4, 5, 3 cm is super big already. So for a 17 cm cyst is really super duper big. Okay, my client, of course, being very young, she was taken aback. Okay, but because a woman only have 2 ovaries, so to remove 1 ovary at a very young age is a super rude shock to her. So with that, the doctor told her, you can consider if you would like to do surgery, because this is a very emergency case, we will expedite it. The earliest date that she can schedule for surgery was about 2 weeks later. So my client went back and she asked me for what is her coverage. I told her that she could be able to have a private specialist if she has anyone in mind, and because it's a very big cyst, and usually it's very uncommon and unusual to have such a big cyst and at such a young age, so it's better to seek a second opinion rather than just cut off the ovary. So that's the reason why that very day she shared it for a second opinion in a specialist clinic. And this specialist clinic actually told her to emergency come in the very next day, early in the morning. So after the investigation, the specialist managed to tell her the structure, the composition of the cyst. That means whether or not what is it made of, is it water, is it mucus, and with the structural look of that cyst, she's able to determine how many percentage is it cancerous, and whether or not is she going to remove the whole cyst. So long story short, the client managed to have a treatment plan that is actually partial with removal of the ovaries, and she's able to keep most of her ovary tissue. And surgery was scheduled about 4 days later after the first visit to the specialist. And thankfully, it was scheduled 4 days later because the cyst actually burst. And usually, when cyst burst, it's super painful for my clients. So in all this, after the whole claims and the surgery, right, my clients managed to claim 100% and fully because she was in a previous scheme for 100% cover in the IP. So she has no worries about it, and she managed to cover all her things. So what I'm trying to share is that because my client has IP, she managed to have options, and options enable her to make a more informed decisions than if she has to stick with a public hospital plan. Okay, so the next point is actually for the ward. So what I'm trying to share with the ward for my clients is that I'm not sure about you, but I'm actually quite pampered. So what happens is that if I have to stay, or rather if I'm sick, I would not like to stay uncomfortably. I like to be more comfortable. I do not like to be hot and sweaty. So for the ward wise, right, B2 and C ward, they are actually naturally ventilated. There's no aircon, as well as I may have to share the room with 6 other people. That's something of my consideration, but that may be pertaining just to me, may not be happening to you. But I'm just sharing that what's maybe one of the considerations. Even some people will tell me that they are okay and happy with C ward, which is really fine. But the question is that even if you want to go to the very subsidized C ward, because it's by mean testing, so are you really able to choose that in terms of the choice? So these are some of the food for thought that you may want to look at. Let's go for the next. So for IP, so what are kind of changes in the IP? So just now I've shared with you most of the changes for the MediShield Life. So next, I'm going to share with you some of the changes introduced in 2018 for insurers, which is that the direction is that for insurers since 2018, by 2021, there'll be no more 100% coverage. So it will only be co-payments. So yes, just now the example that I gave you, my client do not have any more 100% coverage anymore. She still will have to do a co-payment. Okay, so for MediShield, this graph over here, right, is actually to show you for MediShield Life, before we compute the claimable amounts, co-insurance and deductibles will be taken out first. So deductibles are calculated depending on the ward. Of course, the lower the ward, then the smaller the deductible, as well as the co-insurance payment. Co-insurance payment is a co-payment component, which is a percentage. So as of the new IP riders, usually it will go into 5% or 10% co-payment range. There's no more this deductible and co-insurance kind of differentiation. It will be all lumped into one co-payment component. And not only that, for the co-payment component, it will be further categorized into panel and non-panel. I'll share more in details also in the later few slides. So some of the other companies will even offer you premium discounts based on your claims experience. For example, if you were to think about like motor insurance. So for motor insurance, if let's say you don't have claims for many years, so what happens? You will get a no claims discount. So these are some of the claims-based discounts that you can see happening in the IP plans as well. So let's go to the next. So what are the changes for IP and rider? So the next point is that first one, incentive to use their panel of doctors. So about 10 years ago, right, IP started to have the 100% cover that I mentioned to you just now, which is what we call first dollar up. And then the premium started to escalate, and it has escalated to a stage where it's quite unbearable for both the policyholders and the insurance company. To give you an example, it actually went the last premium, it can be 5 times more than like just a few years ago my clients pay. So I'm sure those who have IP plans, you will have experienced that as well. So in order for the insurers to manage this portion, to make sure that it's affordable for my clients, So they will incentivize for you to, for example, use their panel of doctors. So the next point is that by having more coverage for pre and post hospitalization treatment fees. So like for example, if you use their panel of doctors, you'll have more coverage, longer number of days for pre and post hospitalization treatments, or you or even have high limits if you use their panel of doctors, like much higher limits. For the next point is that on top of that, right, if let's say you use a non-panel doctors, some companies will even add on more additional costs for you before they will compute your claims. All right, so let's move on to the next. I'll further illustrate what I've shared with you of the changes in the IP using NTUC's rider. So you notice like before 1st April and after 1st April, things are different. So before 1st April on the top diagram, plus rider is what we call last time 100% rider from NTUC. That's the name of the 100% rider. From 1st April onwards, no more applicable, no more plus rider. So you will have to pay 5% of the claimable amount. And if you were to use their panel of doctors, you will have a limit cap at $3,000. All right. So we also used to have a hospitalization cash benefit. That means if you choose not to stay in a private ward, you choose to stay in a government A ward and below, you will get a cash amount every single day. Okay. So, but that are all removed. These are all removed to keep the premiums more affordable. So the other set of riders can be like assist rider, which the co-payment amount is actually higher at 10%. Okay, but if you have this rider and if you use another doctors that are not in the panel, what happens is that there will be no cap for the 3,000. On top of that, there will be $2,000 that you need to pay for additional costs before the claims will be computed. So all these changes points to to prevent unnecessary costs, so that people will actually think twice about what kind of treatments that they want to go to, who they want to go to, when they want to make the claims. Okay, but however, on the flip side, I also want to share that because of this kind of sharing costs, people may also tend to delay their treatment as well, and tend to thereafter, because of the rolling kind of illnesses, and have chalked up more costs. So these are some of the two sides of the coins. So let's go to the next slide to share with you more. So how does the claiming bill looks like? Okay, this is from one of the clients. This client has 100% cover. So you notice that the total payout amount is 23,000 plus. Okay, so this because he seeks treatment from a private doctor, and his total coverage is actually covered. But so my next point is that, so now with the co-payment of, let's say I take it the 10% co-payment as an example, the co-payment my client has to pay is no longer zero, but $2,300. But because this is a private doctor, right? So if the payment is a bigger bill, like 100,000, there's no cap. My client have to pay a 10,000 instead of having a cap. So my next point also is that because this doctor is in a non-panel, so in next, the co-payment is 12,000 instead of 10,000, because you still have the additional to add on the $2,000. So 10,000 is the co-payment, additional $2,000 because it's a non-panel doctor. Whereas my very last point for the panel of doctors is actually capped at 3,000. So that's my last point for the whole example. So if you're not very sure, you can always check out with me in the future. Okay, so let's go for our next slide. So what is the things that you can look out for? Okay, so while doing claiming, right, or rather you are having a coverage, some things that you can look out for is, one, is your doctor within the panel? Certain doctor, right, we no longer have this luxury last time because I'm covered 100%. I can go and visit any doctor I want to. I can find any doctor. Now, even if let's say I want to visit a specialist, I know I'm being covered. I may want to really check out my doctor first. Is he or she within the panel? So that's my very first point. Is he or she within the panel? So can I claim? What is my claims limits? What do I have? So the next point that I have is that for food for thought, will this change how you choose your treatment? I'm very sure it will change how I choose my treatment. So I'm not very sure how about you. All right. So typically that's the trend. All right. So my last point is that any other coverages that you may have forgotten. For example, there are certain plans in the market that I've seen, right? My clients may add in some riders to give them some benefits if they were to be hospitalized or needing treatment, etc. How about your employee benefit? Are you aware of what are the details? Will be more uptight to go and find out the details. And let's say personal accident plans. Are you aware that there are things that you can use from it as well? So these are some of the things that you can look out for your shield plans to help to cover some of the co-payment costs as well that you need to fork out now. All right, so let's go to the next slide. Some of the alternatives you can consider. So the very first point that I have for you is hospitalization cash plans. All right, so what are they? So there are plans where when you are hospitalized, you could be able to get daily cash, get some money, irregardless of your wards. You can have a get well benefit, which a sum of money, and then you can even cover your MC, a sum of money to cover your MC as well. And if you have a surgery needed, you will have a lump sum of money for surgery as well. Infectious disease, because of that, you can also have a sum of money. So these are hospital plans that you can find, and generally such plans are quite affordable. It's like, for example, starting from $200 per year for someone aged 30. All right. The next point that I have for you is that alternatives you can consider is global hospitalization plans. So these hospitalization plans are people who are like, for example, global citizens who foresee that they may need coverage all over the world. Okay, or they want to just travel elsewhere for cover, for example. So they will have more comprehensive coverage. You can even cover like maternity costs, as well as things that typically IP do not cover, like outpatient costs and even dental costs. The last one is company H&S benefit, like your employee benefits. There are other options that clients may not be aware of. For example, like you can add your dependents, you can enhance your coverages on top of it. There are certain small little things that you can actually adjust a little bit here and there in order to maximize its potential to you. All right, so let's go on the next slide. So for the next slide, sorry, the question will be, what do you do when you need to claim? So during the purchasing of insurance, right? My clients always, or sometimes some of them will have this bad experience rather, that they will say that, hi, I buy already, right? I don't know whether can I claim or not. How many of you has the same thought? Okay, so that's the reason why the work really starts when you're buying the insurance. You need to know what you own. All right. So first one is that the next point is that did you check out with the insurer what are the things that they cover? Like certain companies, right, or different IP companies for maternity complications, they do cover, but what is the exact complications? Different companies have different details. Are you aware of that? Yeah. So these are some of the minute details that you need to take a look at it and sit down with the advisor to actually check it out. All right. The next point that I have, when you need to seek out for treatment cost, did you actually get a letter of guarantee? Yeah. So when you get a letter of guarantee, right, it more or less also gives you an indication whether or not this treatment can be covered by the plan. All right. So that's why when the needs arises, you will not be so panicky, as well as it will defray some of the costs. Because now that the coverage is no longer 100%, right, you may need to have more considerations when formulating your treatment plans. So you need to check out what are the claims limits, okay, and then what kind of procedures. Usually when you check with the insurers to get this LOG, right, it gives you an indicator that, okay, more or less they will consider this better considerations for this kind of cover. Okay, so for the next point, so did you check out the hospital? So why I say that, right, is because for some letter of guarantees, right, there are limits as well. So for example, I have this client, right, she knows that her treatment plan will roughly cost her about 50,000. So she also get a letter of guarantee, but she was told by the hospital that the letter of guarantee is only 20,000. On the day of discharge, right, she needs to pay up the rest of the amount, which is 4 days later. So she got a very, very shock. And it's only because of this hospital. the hospital's policy are different. So different hospital has different um, uh, financial plans policy as well. So do check our hospital before the changes. And hospital and doctor can be different. So the doctor can operate at this hospital, and your bill, how you claim for the bill, will have to follow the doctor, the hospital, instead of following the doctor's manner. So please understand this. All right. So when you are applying for the condition, when you're applying to upgrade your IP plans, did you actually declare all the conditions? Do you remember to declare all your conditions? Because what happens is that if my clients forgot to declare, they may be rejected, and we want to avoid such disappointment in future. So the next point is, while you're looking at it, right, many years ago, when you're buying your plans, right, do you have any exclusions? That exclusions, you need to read carefully what are the wordings, so that you know that what are the limits as well, and most likely it will not cause you to not be able to claim. So last point that I have for you is a gentle reminder that hospitalization is actually a reimbursement plan. So means that it usually is actually come out of pocket first. So it's not the expectations of it will cover me 100%. I don't need to come out of my own pocket first. No, it's actually a reimbursement plan. All right. So next point for my next slide. Coming to the very nice part, which is how to avoid claims experience. So as promised for the start, I will share about how to avoid all these bad claim experience. So let's go to the next part. The very first thing I would like to demystify, right, is the idea that hospitalization claims takes a long time. This data shows from MOH shows that it is really actually not true. All right. If you notice, right, the claims experience is very fast, like 0 or 1 day, that kind. So I don't think it's very long at all. But however, other things will cause a delay. For example, is the information submitted by the hospital to the insurer adequate? Is it incomplete? Is there more things that is required? So what happens is that as a client, right, I understand it's very natural for all of us to feel very disappointed if you're not able to claim, right? So there are details that I will share with my clients or prompt them. Hey, did you submit this? Is this needed? How is it like? So that will actually minimize the bad claims experience. All right. So I'll go to my next slide as well. So as a client, right, of course, like just now I said, to avoid the disappointment of not being able to claim, during the application process, it's also better to share more about your health conditions as detailed, as complete, as true, as accurate as possible. It's better to be given an exclusion or even rejection upfront, rather than facing all this rejection after so many years of paying premiums, right? And then you realize, oh no, I can't claim. Why like that? Then you get angry, disappointment, and you feel like, oh, this is all like a scam, for example. But it's not true. There are really certain things that you can do, steps in place already to prevent this. So advisors like us, right, we will be able to sit down and run through with our clients the details way beforehand, and manage my clients' expectations way before this happens. I'll share with you what happens to my client. So what happened is that one of the team's client, he or she applied a policy for the mom when the mom was still healthy. So what happens is that subsequently down the road, the mom developed dementia. And because of dementia, the mom was hungry, and what happens is that she misunderstood a bottle of whitish liquid as milk. She drank it down. It's actually detergent. When my client saw it on the CCTV, right, within 30 minutes, he rushed home. So what happened was that he rushed the mom to the hospital, pump the stomach, do treatment for the mom. It chopped up the hefty cost. But because mom was old, so ultimately mom died. But then he still have to pay for this amount. So he has this mindset of thinking which the bills will be covered, right? So because he bought the private hospital and it's 100% coverage. So what happened was that he got a shock actually. His claims was rejected. The rejected return was because the condition was inflicted due to dementia. So that one was excluded. But because my client showed me that letter, so I told my client, that's not true. When we bought the thing, your mom is of sound of mind. So it's only thereafter she developed this dementia. So let's appeal with the proof. So with the proof and with the appealing, thankfully the claims get through. So these are some of the things advisors like us can be able to help clients to expedite or even help them to go through, put through some forms of claims. If not, they will actually have a anger or a grudge that, hey, why cannot I claim? Yeah, so these are some of the things that we can smoothen out the process for them. Okay, so for the next point is that so while running through all these benefits with my clients, right? So this will give my clients a peace of mind that their coverage, whatever they need it can be covered, and so that they can focus on the things that are very, very more important in their life. For example, like your health as well as your family. Please feel free to reach out to me and my own team. My name is Larel Wong. Thanks for spending the afternoon with us today. Have a good weekend.